Watch video 35 from the Workbook NISM Series 17 Retirement Advisor Certification Examination Final Feb 2024, and review the multiple choice questions and answers. 1. Which act requires employers to offer mandatory retirement benefit schemes? A. Income Tax Act. B. EPF and MP Act of 1952. C. Payment of Gratuity Act, 1972. D. National Pension Scheme. Answer, B. EPF and MP Act of 1952. 2. What is the minimum contribution rate by both the employee and employer under the Employee Provident Fund, EPF, scheme? A. 10%. B. 12%. C. 15%. D. 8%. Answer, B. 12%. 3. Which part of the employer's EPF contribution is diverted to the Employee Pension Scheme, EPS? A. 8.33%. B. 10%. C. 12%. D. 14%. Answer, A. 8.33%. 4. What is the tax implication on interest credited on employee contributions above 250,000 rupees in a year? A. Fully exempt. B. Taxable from April 1, 2021. C. Taxable only after 5 years of service. D. Taxable only on retirement. Answer, B. Taxable from April 1, 2021. 5. What is the employee's contribution rate in the National Pension System, NPS, for government employees? A. 10% of basic plus DA, B. 14% of basic plus DA, C. 12% of basic plus DA, D. 15% of basic plus DA. Answer, A. 10% of basic plus DA. 6. Which scheme guarantees a pension for life upon retirement at the age of 58? A. Employee Provident Fund. B. Employee Pension Scheme. C. Employee Deposit Linked Insurance Scheme. D. National Pension System. Answer, B. Employee Pension Scheme. 7. What is the employer's contribution rate to the Employee Deposit Linked Insurance Scheme? A. 0.5%. B. 1.16%. C. 2.5%. D. 10%. Answer, A. 0.5%. 8. What is the maximum gratuity exemption limit for non-government employees under the Payment of Gratuity Act? A. Rs 10,00,000. B. Rs 15,00,000. C. Rs 20,00,000. D. Rs 5,00,000. Answer, C. Rs 20,00,000. 9. What is the condition for receiving gratuity in case of early retirement? A. 5 years of continuous service. B. 10 years of continuous service. C. No condition of continuous service if due to death or disablement. D. 7 years of service required. Answer, C. No condition of continuous service if due to death or disablement. 10. Which of the following is a feature of the National Pension System for government employees? A. Defined Benefit Plan. B. Defined Contribution Plan. C. Contribution by the employee is 14%. D. Withdrawal before age 58 is tax-free. Answer, B. Defined Contribution Plan. 11. Who contributes 1.16% of wages towards the Employee Pension Scheme? A. The employee. B. The employer. C. The central government. D. Both the employer and employee. Answer, C. The central government. 12. What is the tax implication on withdrawals from the EPF before 5 years of continuous service? A. No tax. B. Taxed at 5%. C. Taxed at 10% TDS. D. Fully taxable as income. Answer, C. taxed at 10% TDS. 13. Which of the following is exempt from tax for government employees? A. Gratuity received after 5 years of service. B. All retirement and gratuity benefits. C. Employer's contribution to EPF. D. None of the above. Answer, B. All retirement and gratuity benefits. 14. What portion of the superannuation accumulation can be taken as a lump sum upon retirement? A. 50%. B. 1/3. C. 25%. D. 100%. Answer, B. 1/3. 15. Which entity is responsible for managing the Employee Provident Fund Scheme? A. National Pension Scheme. B. Life Insurance Corporation. C. Employees Provident Fund Organization, EPFO. D. Gratuity Fund Board. Answer, C. Employees Provident Fund Organization, EPFO. 16. Under which section are employer and employee contributions to the EPF eligible for income tax deductions? A. Section 80C. B. Section 80D. C. Section 10(10). D. Section 24. Answer, A. Section 80C. 17. What happens if an employer contributes more than 750,000 rupees to an EPF or NPS account? A. Fully exempt from tax. B. Taxed as perquisite. C. No tax implication. D. Only taxed after retirement. Answer, B. Taxed as perquisite. 18. Which type of retirement plan is often insufficient to meet income replacement requirements? A. Superannuation benefit. B. Mandatory retirement benefits. C. Voluntary retirement benefits. D. National pension scheme. Answer, B. Mandatory retirement benefits. 19. Which of the following schemes is run by the government and guarantees a pension for life? A. Employee Provident Fund. B. Employee Pension Scheme. C. Superannuation Fund. D. Gratuity Fund. Answer, B. Employee Pension Scheme. 20. Which act regulates the payment of gratuity to employees in India? A. Income Tax Act. B. Payment of Gratuity Act, 1972. C. EPF and MP Act of 1952. D. Superannuation Act. Answer, B. Payment of Gratuity Act, 1972. 21. Which of the following is true regarding superannuation funds? A. Employers can contribute 50% of the employee's salary. B. Payments received at retirement are fully taxable. C. Contributions are restricted to 27% of the employee's earnings. D. Employees are required to contribute monthly. Answer, C. Contributions are restricted to 27% of the employee's earnings. 22. Which scheme provides assurance benefits to employees upon their death during service? A. Employee Deposit Linked Insurance Scheme. B. Gratuity Scheme. C. National Pension Scheme. D. Employee Provident Fund. Answer, A. Employee Deposit Linked Insurance Scheme. 23. What is the primary objective of the Employee Deposit Linked Insurance Scheme? A. To provide pensions to employees. B. To give lump sum gratuity. C. To provide insurance coverage in case of employee death. D. To offer tax benefits on deposits. Answer, C. To provide insurance coverage in case of employee death. 24. Which retirement benefit scheme requires the creation of a trust fund managed by trustees? A. Employee Provident Fund. B. National Pension Scheme. C. Superannuation Benefit. D. Gratuity Scheme. Answer, C. Superannuation Benefit. 25. How much can be withdrawn tax-free under a superannuation scheme at retirement? A. 1/4 of the accumulation. B. 1/3 of the accumulation. C. Full accumulation. D. None, it is fully taxed. Answer, B. 1/3 of the accumulation. 26. Which is a key feature of the national pension system for central government employees? A. Defined benefit plan. B. Defined contribution plan. C. Fully exempt from tax at withdrawal. D. Employer contributes 20% of salary. Answer, B. Defined contribution plan. 27. Who administers the employee pension scheme? A. Central government. B. Employees Provident Fund Organization, EPFO. C. State government. D. National Pension Trust. Answer, B. Employees Provident Fund Organization, EPFO. 28. Which type of contribution is eligible for income tax deduction under Section 80C? A. Employer's contribution to superannuation. B. Employee's contribution to EPF. C. Gratuity payments. D. Employer's contribution to gratuity. Answer, B. Employee's contribution to EPF. 29. What portion of government employees' salary is contributed by the government to NPS? A. 10%. B. 12%. C. 14%. D. 8%. Answer, C. 14%. 30. Which section of the Income Tax Act deals with the tax exemption on gratuity for government employees? A. Section 10(10). B. Section 80C. C. Section 24. D. Section 80D. Answer, A. Section 10(10).